Hi guys, it's Pete here. So I want to go through today, 28th February, the Stock Market Genius market update, all right, on what is happening in the world right now. And I think without me going to it, I'm pretty sure most of you will have already felt the tremors, right, the uncertainty and the volatility in the market. Okay, so let me just go through what I see happening right now. And for those of you who are subscribers later on, I'll go through more in depth on some of the stocks that we're looking at and also my trade ideas for this week. Okay. All right. So right now, what we see in the investor sentiment, right, is that we are in the extreme fear situation, right? It is only at 18, Okay. Right. Think about it. Just 1 year ago, close to one year ago, 1 month ago, we were at 40. Now we are at 18. That's how fast the sentiment has shifted. Okay. And right now, even when you look at the other sentiment indicators such as the AAII, which stands for the American Association of Individual Investors, right? Start of the year, right? Start of the February period, we were having about 33% bullishness. Now we are dropped down to less than 20%, okay? And 60% is actually bearish, okay? So that is an increase from 42%. So from 42 to 60 is quite a big jump. It's almost half a jump, okay? Right? So what is happening right now is that actually, to me, all this negative sentiment, right, shows me that it could be very soon, or in fact, right, I want to take action as soon as possible because usually with such low sentiments, it's usually great news. Okay, so for example, if you see over here, when we have very low sentiment, right, sentiment is the blue line, right, it always indicates a low period in the chart, right? For example, here as well, okay? And another one is here, when we have very low sentiment, a lot of fear, it was also the low part of the chart, okay? And once again, over here, right, we had this. And then just very recently, we also went below that, okay? And we had a very little bottom, and right now we are here, okay? And the sentiment is even lower, okay? It's even lower than that. So, guys, guess what? Warren Buffett always says, when the fear, right? Everyone is fearful, you should be greedy. Okay. So I think that's what I personally want to do, and I will leave it to you to decide what you want to do. Okay. But I want to share with you while the market is very, very fearful right now. Okay. What do we see on other measures that is measuring the market? Okay. And to me, is this when we are looking at the market, I always say that the retail investors, in the stock market investors, are usually the least reliable. Why? Because our day-to-day living does not rely on it. Whereas the operator on the ground, the actual commodities traders on the ground, their livelihood relies on them being accurate about the market. Okay, so over here, one of the indicators that I really like to look at is the measure of CEO confidence. Okay, and usually when we have a declining CEO confidence, is where we will start to enter into recession territory. Okay, for example, you can see just before we go into dot-com bust, right, the confidence level dropped below 50. Similarly for 08, okay, and also before COVID, the confidence level starting to drop. But right now, what is happening is that ever since we had a very, very sharp increase after COVID and then a very, very nice pullback, right, to bring everyone back to reality in 2022, where the stock market declined over 30%. Right now, where are we? We are actually way above the 50 middle mark. Okay, so actually the CEO's confidence level is actually pretty high. So what does that tell you about the market? Think about it, okay? Right? And another thing is that while the stock market is all doom and gloom, very pessimistic, the truth is that we are seeing the US manufacturing sector in January expanding, right? At 50.9%, right? Usually, how do they measure this? Is if it's below 50, means it's not good. If it's above 50, means it's great, right? And this is the first time we have gone above 50% after 26 weeks of contraction. So does this look like a declining market, a negative market right now? Not really. So what is causing all this market volatility is that, there was a bit of a jobless claim report coming out that's not too good. But really, when you look down to the ground, right, it doesn't seem to be the case. Okay. Now, let me show you another thing is that another spectrum of people that I really rely on are the commodities trader. Okay, these are people who day in, day out, they need to predict the price of, for example, gold over here very accurately to make a living, right? And you can see actually gold prices has been dropping. That means what? Now think about what do people buy gold for? People buy gold for safety. And right now, with the prices dropping, it just means that the interest, the buying sentiment for gold has actually tapered off. So does it look like something where people are flocking for safety? Not really over here, okay? Right? And you can see the good news is that overall bond yield has, after a very, very sharp increase, right? This interest rate cutting since September, right? It has been increasing. And right now, we are seeing the interest rate finally rolling downwards, really. So to me, these are all great news for the stock market. A good stock market really depends on the interest rate not being too high over here. So I really like what I see on the ground and even on the interest rate front, right? And if you look at the S&P 500 chart, to be frank, it is actually not that bad, okay? So this is a daily chart. If you look at it, actually we have only gone down to about 100 moving average. It is not unsurprising. We have been there, visited this level many times, right? Early part of 2025, in January, we did that, okay? October, September period, we did that. So really, if you drew a line just like this, right? Okay, basically we are back to the similar levels where we were back in December. Okay, so does this mean it's a crisis? Guess what? Back in December, the sentiment wasn't that low. So same price, different sentiment. Why is that the case? Because the market is always a very emotional creature, right? One thing to note is that we did have 5 consecutive days where the stock market continued to head downwards. That spooked a lot of investors, created a lot of fear in them. Okay, and in fact, if you look at weekly charts, the drop looks even less significant. Right? Look at it. This is a period between mid 2021 to today. Right? And you can see the uptrend is so sweet. Okay, so guys, whenever you are facing a lot of fear in the market and you don't quite know what to do, it seems very confusing, just take a look at the longer term charts and ask yourself, does this look like something rolling over and is not doing well? Okay, not quite. It still looks pretty decent to me. Okay, right? Now, one other way I like to measure the market, the situation, right, is that I want to use BTC, Bitcoin, to look at what are the main causes of the liquidity. Because right now, Bitcoin, it is still at a stage where it kind of moves in tandem with the stock market. If the stock market heads upwards, right, it will head upwards. If the stock market comes down, it will come down. Okay, so let me just show it to you over here. This is the S&P. Let me just stop share. Okay, let me just share again. This is the S&P 500. Okay, right? If I just add the BTC chart to it, okay, you can see that, I need to put into a separate percentage. Give me a second. Okay, all right. Okay, you can see that it's pretty much together with the stock market. Granted, there will be a little bit of difference, but overall, if the stock market is heading upwards, it's heading upwards. If it's heading down, it is heading down, right? So that's what's happening to the BTC right now. So what we can do is that BTC is a very unique instrument, right? Unlike the stock market, whereby sometimes we don't quite know who is buying, who is selling, right? Even if this person bought it, I don't know when he bought it. I don't know whether he's a long-term investor or trader. Okay, but BTC has all this information that's very interesting and very useful, right? For us to analyze. Okay, so over here, I just want to share a little bit. I don't want to overwhelm the session. Okay, but if you look at, for example, in BTC, we have these terms called the holding period. That means we can actually tell, right, based on the transaction data on the chain analysis, right, that if this person sold a Bitcoin, right, when did he first bought it? Because we know exactly where this Bitcoin started, right? And you can see based on Wednesday, on 26th of February, most of the BTC that was transacted, being sold, okay, were actually what we term as very, very short-term holders, okay? Or in crypto terms, we call them paper hands, okay? Right? So basically over here, you can see majority of it, 15 million of it, they are actually all less than 24 hours. That means what? The day traders, okay? So they got liquidated, okay? The large bulk of it actually came in here, the 33 million, 20 million, 20 million. These are also very short-term holders ranging from 3 months to 1 day. But you realize once we head upwards towards holding period of 6 months to 12 months, 1 year to 2 years, basically there were no more activities happening, right? There were no more massive selling. A lot of the massive selling were in the short-term traders. That means these guys only bought their Bitcoin about a month or so ago, right? So what does this tells you is that it is probably a reflection of the stock market as well, whereby a lot of the retail selling are not the longer term investors. I do not believe is just the institution, but really a lot of the retail investors who recently bought at the high, and the moment the share price moved like 2%, 3%, they got spooked and they started selling. Okay, right? So this is what we see in the market right now. And I don't want to get washed up as well, right? Knowing this information gives me a lot of comfort in staying strong in the market. Now, as an investor, what can we do? I would say, firstly, none of what I say here is investment advice. I just want to share with you guys what I see on the ground and how I want to handle the market. Firstly, I don't really want to time the market and say, oh, now that the market is very high, I'm going to exit, and then later on when it drops, I'm going to re-enter again. That's the theory that sounds really good, but in practical terms, is very, very hard to be done. Why? Because when it started dropping, imagine this is the high, right? When it started dropping, at the tail end, only if you know this is the bottom, you will start to enter, right? But what happens is very often we will not enter until it passes the bottom and head upwards. Guess what? That's where our mind will start to play tricks with us. And we will say, hey, maybe this is what is known as the very famous dead cat bounce, right? That means the share price hit upwards a little bit and then later drop some more. Okay? So people will not buy even after the bottom is shown, started to head upwards, they will not buy. When it hit even further upwards, they will not buy. They'll say, no, it will come crashing down. Only to see the share price keep heading upwards, then their mindset shift to, oh no, I missed the boat. Okay? So even at my level, I don't want to subject myself to that kind of mindset challenge. So what I personally do is, I just stay invested, invest in the best and ignore the rest, right? Buy into the best companies out there that you can think of. For example, let me just share with you recently, Nvidia, okay? Right? It was one of the companies that announced their earnings. And guess what? Nvidia actually had an 8% drop in their share price, okay? But what do we see here is that Nvidia actually beat the earnings flat out, right? The revenue beat by 3.3%. Earnings also went up by close to 6%. And if you look at the overall matrix, this year, right, or they call it financial year 2025, was one of the best year ever. The operating income more than doubled, okay? The cash flow also more than doubled. And at the same time, they are not just frivolous, wasting all this money. They actually increased their cash balance, right, by close to double as well. So this is a very, very strong company with very strong balance sheet. And if you look into further details, right, you can see that overall year-on-year revenue went up by 72%, okay? You can look at operating income went up by 77%, right? And that resulted in the earnings per share going up by 82%. And that is based on the GAAP earnings. That means what is, generally accepted accounting practices. That means it's actually a much stringent one. Usually they will say non-GAAP accounting, right? So include things like EBITDA and stuff like that. No, even following a very strict criteria, Nvidia did really, really well. Okay, right? So this is the summary of the whole year, right? Everything went up by more than 100%. That is insane. And guess what? The only thing that didn't go up by 100% is the operating expenses. So they managed to increase their revenue, increase their sales, produce more products, more chips. At the same time, they actually spend less, right? If your revenue goes up by 100% and your expenses goes up by 100%, then guess what? That is a one-to-one, right? But over here, it's actually a fixed cost system. That means for every chip that Nvidia produces, actually it costs them lesser and lesser and lesser because the upfront cost is heavy, but subsequently it just tapers off. That is a great business. And for first quarter 2026, they actually projected the revenue with 43 billion. Now take a look. We are looking at an increase from 39 billion over here. Okay, right? And they say that the margin is going to be 70%, guys. 70% margin. That's crazy, okay? And at the same time, they expected their tax rate to be at a very healthy 17%. And they expected, right, the overall GAAP income to be about 400 million. 400 million, if you look over here, right, their expected income wasn't even that high, right? So guys, this is what I meant by a great business, okay? At all measures, it was doing really, really well, right? And if you look at, for example, valuations, Nvidia on the P ratio, yes, it's not really cheap, right? It's at 40 times, but if you look backwards at the past year's valuation, it's actually one of the cheapest right now, okay? Right? Even if you look at other metrics like price to operating cash flow is 46, it's also one of the cheapest right now, right? And even if you look at other things like PEG or even EV/EBIT, they are all at multi-year low. So what does it tell you? That means the business is firing on all cylinders, doing really, really well, and the market is pricing it the cheapest it has ever been. Right. So as an investor, I know what I'm going to do, right? I'm looking at definitely scooping up some Nvidia shares, definitely, and perhaps using options. Okay. All right. So I hope this is useful for you guys. Now, for those of you who are subscribers to SMG, in my next video, I'll go through some of the stocks analysis that we had and also my trade ideas for this week and this month. Okay. All right. If not, for my subscribers, I'll see you in the next one. See ya.